would like to go ahead and welcome all of our participants and thank you all for joining today. My name is Sarah Ishak, and I'll be one of your moderators along with our CEO of Wall Street Research, Alan Stone. As many of you may already be familiar with Wall Street Research, we are a 35-year-old research and investor relations consulting firm. We've been running investor roadshows for quite some time now and recently transitioned over to a virtual show due to the current climate. So today we are presenting our client company, NewLake Capital Partners. NewLake is an established real estate investment trust that invests in a diversified portfolio of real estate assets, both retail and commercial, within the cannabis space. We will have the CEO of NewLake, Anthony Conglio, present the firm along with the Director of Acquisitions, Jarret Annenburg. So following the presentation, Alan will present a series of questions prior to opening up the Q&A session. So to all of our participants, if you do have any questions, please just feel free to add those into the chat box and we will attempt to get through as many as possible prior to the end of this call. And I'd like to quickly mention a brief disclaimer. This is a private offering that's open only to accredited investors. Most of our participants should fall into this category. However, if you are not considered an accredited investor, we do ask if you can kindly exit the room. So your continued participation is an affirmation that you are. Also, we will be sending follow-up emails directly following the webinar for those of you who may have serious inquiries regarding the offering. So you may be in touch with the team directly. And with that being said, I'll go ahead and pass it over to Alan Stone.
Thank you, Sarah, and welcome everybody to the Wall Street Research virtual webinar. Today we're hosting NewLake Capital Partners, which is a $100 million real estate investment trust, commonly known as a REIT. Which is specializing and focusing in the cannabis industry, where they are doing sale-leaseback transactions to very large multi-state operators. Most of these are publicly held companies that have significant capital and have good, very solid credit standing. And the company was able to really find a very good niche in this industry, and which is considered a non-essential industry. So we have the CEO joining us, Anthony Conglio, and the Director of Acquisitions, Jarret Annenburg, who are here to tell you all about NewLake Capital Partners. And we're going to have a PowerPoint presentation initially, which should be about 20-25 minutes. And we're going to have question and answer session and then open it up to the floor in the chat room and moderated by Sarah. And so we again welcome everybody to the webinar today, and we're pleased you could join us. And I'm going to kick it off and turn it over to Anthony.
Great. Thank you, Alan. And hello, everyone. And thank you for taking the time to be with us today. I'm Anthony Conglio, and I'm the CEO of NewLake Capital Partners. As you've heard, I'm joined here today with my colleague, Jarret Annenburg, our Director of Acquisitions and a key partner in our business. We're excited to talk to you today about NewLake, but before we begin, I do need to remind you that the comments on today's call will include forward-looking statements, which by their nature include estimates, projections, assumptions, and forecasts, which are subject to obviously risks and uncertainties that could cause actual results and outcomes to differ materially from the opinions that we're expressing here today. We also want to remind you that this session is being recorded for those of us not able to join live. So with that, I'd like to review our agenda. First, I'll provide you with an overview of NewLake and discuss the generational opportunity we see to be part of one of the fastest growing industries in the United States and capture significant returns with limited downside risk. Jarret will discuss NewLake's existing portfolio of properties, addressing the diversity and quality of the investments we've made thus far, as well as discussing and providing some commentary around the pipeline of investment opportunities that we have, which we would deploy the capital we're raising into those opportunities. I'll then come back and discuss our financial outlook, share our thoughts on how we see the business performing during the inevitable recession, and I'll illustrate the return opportunity for you more specifically. And as Sarah said, we're taking your questions at the completion of our prepared remarks. So please note that the Q&A feature is active, and you can use it to submit the questions, that we'll answer when we're done with that program that I've just outlined. So what is NewLake? NewLake is a real estate company focused on building a diversified portfolio of retail and industrial properties that we lease to companies in the cannabis sector for use as cultivation, processing, and manufacturing facilities, as well as dispensaries. Our properties are acquired using a sale-leaseback transaction, and our tenants are some of the most experienced and well-run businesses in the industry. And I would note, and Alan alluded to this, in a world of COVID-19, medical cannabis was deemed essential in each of the 33 states where it's legal. I think that's an important distinction as we are all paying attention to the news, trying to understand what will happen with COVID in the fall. Will there be a resurgence? Will there be future lockdowns? So again, this industry is an essential industry in all 33 states that have legalized medical cannabis. And so it's an important component of the risk mitigation. Our business model, it's simple. We earn revenue by charging rent to our tenants. And our investors receive a nice, healthy quarterly dividend. And we believe there'll be significant appreciation in the value of our portfolio as the legal status of cannabis changes over time. We're an early mover as we institutionalize capital for the fast-growing cannabis industry. And we're capturing this significant value as we play the arbitrage between state and federal law as it pertains to cannabis. Our team has over a century of experience in commercial real estate. And importantly, we think this is a real differentiator. Importantly, we understand the cannabis industry and cannabis real estate exceedingly well. One of our founders ran Green Thumb Industries, one of the leading cannabis companies in the United States, serving as their CEO for over 5 years. So he really has that inside perspective on the industry. Another team member was a founder of one of our competitors, Innovative Industrial Properties, and he was their CFO when the company went public. Rob structured some of the first cannabis sale-leaseback transactions to be done. This incredible industry knowledge, coupled with our extensive real estate and financial services experience, in our opinion, provides a real competitive advantage in originating, underwriting, and assembling a quality portfolio with a strong tenant base that will drive long-term value for our investors. We've been working at this for almost 2 years. We're profitable, we're generating meaningful cash flow for our investors, and we have a diversified portfolio of properties with no leverage, I might add. We do not have any leverage today. And we think our portfolio of unlevered properties is not only recession resistant, but also generates above market yields with long duration, which as we all know, in this economic climate is very, very valuable. So a lot of people do ask when we get into this conversation, why did you pick the cannabis industry to focus on of all the opportunities out there? It's really quite simple. Rarely do you see an opportunity to focus on an industry that will have such broad consumer reach and scale as you could see here. This compares to the beer and spirit segments very favorably, but this industry also has the growth dynamics of groundbreaking new products. It's really unusual to find a business that's in a long-term secular growth trend such as this industry, and we're excited to be early in developing relationships and capturing share that will allow us to build a dominant position in what we see as the newest segment of the commercial real estate industry, cannabis real estate. And as you see here, we are well on our way. We own 21 properties across 8 states. We've come through COVID with no disruption to our business. And we have probably I would say, in my opinion, I believe we have the broadest reach into the industry. And I believe we're one of the most respected companies among our peers. We've raised $100 million we have over 170 investors, and we're looking to raise an additional $50 million to scale our business, enhance our yield, and get one step closer to a public offering. Many people also ask us to compare NewLake's opportunity to other business strategies that have experienced similar patterns of return. We know sometimes it's easier to be able to compare similar industries or similar strategies and look at how those performed as a judgment for how this possibly can perform. As we look through it, the comparison that I believe is most apt is to data center real estate in the early 2000s. Coming off the dot-com bust, data centers were less understood as an asset class since there wasn't yet appreciation for the mass adoption of cloud computing and centralized hosting. And similar to real estate for cannabis, data centers required property investments for HVAC and security that went beyond what a typical industry tenant or, industrial or retail tenant would require. As a result, you can see in the chart, early movers in the sector were able to garner above market cap rates on the real estate and enjoy significant value creation as the industry normalized. So we think this is really the best example we could provide to you on where we see similar traits. So while we're enjoying above market unlevered yields, I do want to point out that it doesn't necessarily mean that we're taking outsized risks. Again, our focus is creating value through the arbitrage between state and federal law, not by taking outsized risk. In fact, when you look at the cash flow coverage of the properties in our portfolio, which is a very key risk metric in our industry, you see that our tenants generate significantly higher property level cash flow than the typical tenant. And that's because cannabis stores typically generate revenues comparable to some of the premier retailing brands such as Tiffany's or Apple, as we've indicated in this chart. Why? Well, this is driven by the significant demand for product and the high throughput nature for these types of stores and properties. Again, we're capturing above market yield, but we're not taking outsized risk. So before I hand it off to Jarret to go deeper into our portfolio and our underwriting, I do want to discuss the durability of our strategy. Providing real estate capital to the cannabis industry is not a short-term opportunity. We don't believe so at all. Real estate is core to the needs of this fast-growing industry. Operators need ever more cultivation square footage to meet the growing needs of the consumer. Likewise, they need more capacity for manufacturing, packaging, and ultimately dispensing through a licensed dispensary. And our sale leaseback transactions allow operators to expand their business without having to raise capital or diluting shareholders or issuing debt that can create balance sheet pressure. So we really do expect that while we're providing great service and great value today to operators to unburden themselves from assets on their balance sheet, we also see continued opportunity, and we're starting to see more and more of this, where we can provide that third-party capital to the cannabis operators so they never have to acquire the real estate and they can control the properties that they believe are so critical to their success. So moving on, like other well-known companies, the cannabis industry is quickly realizing that sale-leaseback transactions for its real estate needs are really a very, very efficient way to fund that real estate intensive expansion. And based on our analysis, we believe the industry will require approximately $15 billion of real estate over the next 3 to 5 years. And we're positioning ourselves to be a leader serving the needs of that industry. So now we'll hear from Jarret as he discusses our portfolio in more detail. Jarret, over to you.
Thanks, Anthony. And thanks everybody for being with us today. You know, as Anthony noted, we've been very active since our formation in building relationships, digging up deals, doing our diligence, and acquiring properties. Today, we've committed about $80 million of capital, own 21 properties in 8 states, with an additional property under contract. You know, at this point, we have about $20 million in capital left to deploy and are focused on a few opportunities. Thus far, we have executed on our thesis and have created a high-quality cash flow stream that has a long duration and grows annually. Our strategy for NewLake focuses on partnering with experienced operators in limited license states and municipalities with the goal of building a national diversified portfolio. This focus on limited license states insulates NewLake's portfolio from general retail trends. In these limited license states and municipalities, such as Illinois, Pennsylvania, and Ohio, you had to have the property under control before applying for the cannabis license. Therefore, the license is attached to the property, giving the property additional intrinsic value and reducing the likelihood of re-tenanting the facility with a non-cannabis tenant. For instance, in Illinois, the regulator recently opened up applications for 75 additional dispensary licenses, and there were over 700 applicants for those licenses. This supply-demand dynamic creates a moat around the business and property in a limited license jurisdiction, making re-tenanting to another cannabis operator at the same rents much more likely. As you can see from this snapshot of our currently owned properties, we're well on our way to creating that nationally diverse portfolio. Given that each state, and in most instances municipality, has its own regulatory framework, we are in constant dialogue with operators and industry stakeholders in each market across the country. These discussions, along with market-specific diligence, creates the framework for us to strategize which markets are best positioned for success before we enter a market. We are committed to building a portfolio that is diversified, not only by geography, but by tenant and property type as well. We believe that diversity is the key to maintaining long-term cash flow across the portfolio. Our evaluation of operators, our potential tenants and partners, focuses on high-quality companies with management teams that have experience in highly regulated, fast-growing markets. Our investment committee is committed to work with the best companies in the sector, and we only partner with those who have strong balance sheets with solid cash flow today, as well as access to additional capital. To that end, 2 of our tenants have raised capital in the past 90 days to fund expansion objectives. Our disciplined operator underwriting to date has been proven given our 100% rent collection through COVID. That said, we know that avoiding concentration in any one operator further mitigates risk. As you can see from the charts, 3 of our tenants today are greater than 20% of our portfolio. But as we scale, our goal is to have no one tenant be greater than that 20% threshold. As I mentioned earlier, we're also very focused on geographic diversification. Exposure to different states and municipalities in varying stages of their cannabis market lifecycle minimizes the risk of adverse impacts on our portfolio from economic, environmental, regulatory, or demographic changes to any one market. Lastly, by focusing on revenue-centric properties across the supply chain, reinforces the operator's dependence on the facilities we own, ensuring obligations to us are a top priority for our tenants. Our strict diligence focuses on the operator, the cannabis market, and the underlying real estate. Diversification with that disciplined diligence drives our acquisition strategy. As you can see from these photos of our assets, our team's extensive background in commercial real estate reinforces that the underlying real estate is a key component in NewLake's diligence and evaluation of opportunities. We understand that others in this industry are comfortable with greenhouse assets in rural locations, but we focus our energy on properties with high alternative use value for both retail and industrial properties. Our retail properties are designed to fit the communities they serve while integrating the operator's brand so the experience is consistent across their national portfolio. In fact, the Columbia Care Dispensary in San Diego, which you can see on the top and middle right, was named one of the top 10 best designed dispensaries in the country by Architectural Digest. We buy properties that you can be proud of. In evaluating cultivation and processing assets, we look for clean, traditional industrial properties in proximity to Tier 1 markets that are easily adapted for an alternative use. As you can see from the maps, we currently own cultivation assets within 1 hour of Boston, Chicago, and Pittsburgh, respectively. We often get asked what we could use the building for in a worst case scenario where the property could no longer be used for cannabis. Well, with the rise of e-commerce, the industrial real estate market continues to show great signs of strength. In fact, Jones Lang LaSalle, the second largest commercial real estate company in the world, just released a report that anticipates the US may need another 1 billion square feet of warehouse space by 2025. Such strong industrial demand reinforces our thesis that focusing on properties with high alternative use is a strong risk mitigant. That is why we put so much effort into underwriting the real estate and understanding the areas in which our assets are located. Our currently owned cultivation facilities are all within dense industrial areas in proximity to Tier 1 metros. Our downside scenarios are protected by this disciplined approach, coupled with our focus on limited license states and the moat around the business that creates, which enhances the risk-return profile of our investments. Excuse me. We are currently raising additional capital to meet the needs of our partners. Through our industry relationships, we have been able to maintain a significant pipeline of new deals, with over $350 million in our pipeline today. I apologize. We are focused on strengthening the portfolio diversification by tenant and geography. As I previously mentioned, we have broken down the markets across the country where our diligence has shown operators are best positioned for long-term success. Given the rapid growth of the industry, we see significant demand for real estate capital and will continue to center our strategy on acquiring quality, high-yielding assets in these limited license jurisdictions. I'm now going to pass it back to Anthony, who's going to walk you through our outlook and return potential for investors.
Thanks, Jarret. In a world where roughly 70% of freestanding retail tenants paid April and May rent and another 18% deferred rent, we are very happy to report that NewLake has received 100% of our rent that's due on time and in full, and we've not received any requests for any rent deferrals. We believe this is a testament to our sound underwriting practices, as well as our focus on limited license jurisdictions that Jarret just talked about, as well as the diversification that we've built into our portfolio. Yes, I know that our tenants benefited from the essential designation and that was important for them staying open and generating cash flow to be able to pay rent. But we do know a few of our cannabis REIT peers that did indeed experience defaults and deferrals. And so again, I'm really, really proud of our team and the work that they've done to underwrite and to assemble a portfolio of such high quality. And I believe that it's the understanding of cannabis and of the industry specifically that's allowed us to make those very important investment decisions and navigate through this very volatile period. As you can see here, we earned $1 million of EBITDA in Q1. We earned about $1.3 million in Q2, and we were able to grow as we deployed our tenant improvement commitment, and we will continue to grow, as we deploy the remainder of our tenant improvement commitments over the rest of 2020 and into early 2021. By the fourth quarter, we're going to be generating more than $2 million of free cash flow per quarter. And with additional final TI that we expect to go out, as I said, in the first quarter of next year, when you annualize that level of cash flow, we'll be approaching that 10% net yield target that we've had. This page here that you're looking at also provides a snapshot of the incremental earnings we could enjoy from raising an additional $50 million. And that's represented by the blue portion of the bars. By raising this additional capital, we can enhance our operating income by scaling our infrastructure while providing further diversification of our portfolio. While we're enjoying this strong revenue growth, we do remain vigilant on managing expenses well. And our target for 2020 is to keep expenses below 1.5% of capital. We're extremely happy with our financial performance to date, and we're on schedule to achieve our yield targets as we complete the tenant improvement reimbursements previously discussed. Beyond 2020, we expect continued growth consistent with the industry's torrid growth rate. Some of you may wonder, how can we feel so confident in that outlook with the specter of COVID resurgences, as well as the potential for future shutdowns and the prospect of a significant and meaningful recession? Well, the answer lies in an industry designated as essential and a product that is positioned to continue experiencing broader consumer adoption and a fiscal backdrop that will have many states and municipalities looking to find new revenue sources and incremental job opportunities to reduce unemployment. It's truly a very unusual time in our country, indeed, in the world for that matter. And as COVID-19 spread across the nation back in March and April and then into May, I do want to share with you that the cannabis industry was busy adapting to new regulations and protocols while enjoying that valuable designation as an essential business in most states that have a legal cannabis market. Massachusetts was the only outlier there, where the governor decided that the adult use segment of their program, which was open to non-Massachusetts residents, ended up being an area he didn't want out-of-state residents coming into Massachusetts to seek that adult use cannabis. So he did shut down adult use. Those stores are open again, and we're seeing a rebound occur in that state. You know, the industry, I do want to talk a little bit about the industry and how well the industry, in my opinion, has managed through this change, right? The industry was already very good at managing through a highly regulated or managing in a highly regulated environment. And think about this, it was also built upon a relatively new technology stack. And what that enabled them to do was to rise to this occasion, continue to serve their patients and their communities and in a responsible manner. And in my opinion, it really elevated the reputation of the industry. Just some of the things to point out to you that they did. They provided curbside pickup, prioritized patient hours. They used technology to not just cope and get through, but to actually reduce wait times and improve the customer experience overall. I just can't say enough about what we've seen in our tenants. I've been truly impressed with the industry's response in the face of such a crisis. And as all this unfolded, we believed sales volumes would persist. And as the data rolled in, sales in most jurisdictions surged in March due to pantry loading, as we all know. But importantly, it continued to rise into April. And now you see into May and into June. And I want to note for you, these are month-to-month growth numbers. These are not year-over-year growth numbers. Again, I want to repeat it. Month-over-month growth numbers. It is quite impressive. One area of weakness we talked about in this chart is Massachusetts, where medical cannabis was deemed essential, but recreational was not. As I said, those are open again, and we've started seeing, as the data shows us, that bounce back has begun. So as the immediate crisis around COVID receded, we recalibrate our attention on how the industry will perform as the US economy falls into a recession. To put cannabis into context, we share this chart where we place the cannabis category into a cohort of small ticket health, wellness, and feel-good items. We believe cannabis will maintain its growth trajectory and behave more like these high-growth products in the upper right hand of the chart. We further went ahead and we segmented cannabis into medical and recreational categories and looked for some comparables. For medical cannabis products, we looked to previous recession performance for over-the-counter products that also treat pain, sleep issues, and anxiety. What we found is that these mature product categories indeed grew as people's pain, anxiety, sleep issues, as all of those continued into previous recessions. Those conditions were only enhanced during those periods of stress. And so you can see that sales persisted or grew. For cannabis focused on the adult use segment, we look to performance of alcohol, beer, and wine as proxies for recession behavior. Again, evidence indicates an increase in unit sales during periods of stress and uncertainty. I would note that what the cannabis industry has as catalysts that these other product groups don't. There's two key catalysts. One is the cannabis industry is in the midst of a long-term secular growth trend, as demonstrated by the 35% CAGR illustrated previously. Two, the growth is going to be amplified by states that are expanding existing programs and new states legalizing cannabis, driven by a desire to generate jobs and tax revenue. So we're very, very bullish on performance and growth in the industry in the face of these emerging economic difficulties. So as we think about the new normal, we thought it made sense to put NewLake into that context. As you could see here, we all know that we'll be living with low yields for a prolonged period of time. I've heard some prognosticators say we'll have low yields for the rest of our lifetime. And if you look at NewLake's targeted yield, we think that this unlevered, I want to remind you, this unlevered yield of 9 to 11% is a phenomenal antidote to this low for long interest rate environment. Also, leverage provides a heightened risk during uncertain times, particularly as you're getting into a recession. And for us, we currently have no leverage. We will seek to put some leverage on the portfolio, but very, very modest. Think 20 to 30% of our portfolio, and think of that leverage as being priced in a more traditional bank sense. That's the type of leverage that we would want to have, something that has term that doesn't put a lot of balance sheet pressure on us. Also, people are worried about inflation. How do we come out the other side of this low rate environment? And how do we come out the other side of the unprecedented global central bank actions that we've seen over the last couple of months? And people are worrying about inflation. And so real estate, as we all know, is a phenomenal hedge for inflation. And then we talked about the uncertainty around COVID and potential for future lockdowns, as well as the recessionary risks. I also wanted to share this with you, that we take seriously our responsibility to be good stewards of our investors' capital. And as you could see from our track record, this group of founders has delivered returns for investors before, and we're confident in our ability to generate meaningful returns for NewLake shareholders going forward. We've paid, as you've heard me say before, we've paid our 8% quarterly dividend every quarter since inception, and we don't see any reason to change that. And we think we're creating tremendous value for our shareholders, not just in the quarterly distribution that we provide, but also in that significant appreciation in property value that will happen over time as that arbitrage between state and federal law narrows. So, speaking of returns to our investors, you're probably wondering, what do we expect here? We believe our investors should expect to earn 2 to 3 times your money via a public market valuation of our business. Net lease REITs typically trade in the public markets based on a dividend yield that they provide to investors. And as you can see on the lower right, our public market peer, Innovative Industrial Partners, has traded in a range of 2 to 4% during most of this time period. Now, I would note that they have a vacancy and a few tenants not paying rent, which I believe is part of why they've been trading above 4% recently. However, when you layer that valuation onto our portfolio, you can easily see where the opportunity is for our investors who are getting into NewLake today at book value. Significant opportunity in our opinion. So as we turn to Q&A, I wanted to summarize by saying we're a profitable business with strong unlevered returns. There's significant opportunity for long-term growth. We have a disciplined approach to risk management and investment decision-making. We have no debt today, and if we do add debt, it'll be modest in amount with duration and terms that are more consistent with traditional bank financing. And lastly, I just can't say enough about our team. The experience they bring both in real estate and cannabis, and more broadly around the cannabis industry, which in my opinion is just so critical to making good decisions. Just really cannot say enough about the team that we have. Also, not to mention the track record of delivering for investors and public company experience, which really paves the way for our investors to be able to accomplish those return objectives that I just talked about. So let me leave it there for now. I'd love to turn it back to Alan and Sarah for Q&A, and I look forward to taking your questions.
Yeah, thank you, Anthony. Excellent presentation. let me begin by asking you some questions. First, how did your company enter the cannabis industry and real estate industry? And what is your position within the industry vis-a-vis other real estate investment players or REITs and so forth?
Okay. So NewLake evolved from over 2 years of evaluating cannabis real estate within a larger REIT called Pangea Properties. And within Pangea, they run a bridge lending business. And during the course of, say, 2017 and 18, they observed significant demand for capital from cannabis companies for cannabis real estate. And they actually made some loans to the sector that performed exceedingly well and provided those investors with great returns. And it was through that experience, and in late 2018, we decided to launch NewLake, and NewLake was created. So, let me get to the other part of your question, which was what makes NewLake different from some of the other competitors that's out there. And I believe it's our knowledge of the cannabis industry, which we think is critical to long-term success. Yes, of course, our team has over a century of real estate experience, and that's definitely important because this is a real estate business. But in our opinion, it is just so critical to understand these companies, understand the states, the municipalities, and the buildings that we're investing in. We really made a strategic decision to focus on cannabis experience because we don't think this is just simply a real estate industry. The evolution of cannabis as an industry is going to really require that those that are successful on the real estate side understand how it can ebb, flow, and evolve. And then the other key differentiator is diversification. We focused on the outset at not being a spin out of somebody else's properties, but building de novo a portfolio of well-diversified assets.
Very good. How did NewLake Partners raise the initial $100 million in capital from the investors? And what were the terms of the prior offerings? And then what percentage of the company do the investors own versus the insiders in the board?
Okay. Well, let me say we didn't use brokers at all. So every dollar that we raised, save for the legal fees, so roughly 99.5 cents on every dollar, was invested in properties, which goes to actually enhance returns. We raised it through our network. The terms of the offering are the same as it was in the first round. We made a strategic decision that it was better for our existing investors to scale our capital base and capture the opportunity that's in front of us, rather than trying to get some paper valuation bump by doing this as an up round. And as far as insiders, you asked about insiders. Insiders and management own and the board own approximately 4% of the company. And if you include Pangea's corporate investment position, it's approximately 14% of the company.
Very good. What sort of cash flow is the company currently producing? And is that more than sufficient for your capital or fixed cost and operating needs? And what are the operating costs and the management fees?
Yeah, so the quick answer is yes. We are generating enough cash flow to do that. We are generating enough cash flow to be paying out an 8% dividend annually, and we pay that on a quarterly basis. So a couple of key metrics: our net income for Q2 was about $900,000. Since depreciation is big in a real estate business, we look at what's called AFFO, or available funds from operations. In essence, what's the free cash flow that we generated? And we generated nearly $1.4 million of free cash flow during the second quarter of 2020. We generated about $1 million of free cash flow in the first quarter, and we'll see that free cash flow grow quarter after quarter as we continue to deploy capital. And we think by the first quarter of next year, if you were to annualize that quarter's performance, we'd be close to generating free cash flow equivalent to 10% of our capital base. So we think that this business is a cash flow machine, and we intend to pass on most of that cash flow to our investors in the form of return.
What's the typical lease terms to the tenants? And do you secure rent escalations built into the leases? And what are the costs of maintaining these properties?
Sure. Let me bring Jarret back in and he'll take those questions.
Yeah, thanks, Anthony. Thanks, Alan. So all of our leases are structured as triple net leases. So the tenants are actually responsible for all of the taxes and operating expenses with the building. Our current weighted average lease term across the portfolio is about 13 and a half years today, with annual escalations between 2.5% and 3%. So built-in rent escalations, built-in income bumps every year. And for the maintenance, while we don't actually maintain the properties, that falls to the tenants. We do have covenants in our leases to ensure that the tenants do maintain the properties, and we're very active in asset management to ensure that they do so.
And how does the cannabis industry stack up compared to other commercial real estate opportunities for companies or REITs of this size? And is NewLake getting a premium in rent from its tenants due to being in the cannabis industry?
Yeah, so again, I'd go back to our comparison to the data center real estate of the early 2000s. Another good comp would be lab space. Again, what cannabis properties share with these other real estate types is the need for additional property enhancements such as HVAC, security, water, that would be above and beyond what a typical tenant would need. So what you see in those industries is there is an above market investment in the property, which then is rewarded by an above market yield. What we also have in cannabis is added yield, representing the incremental risk for that arbitrage between state and federal regulation. And we do have a very strong pipeline of opportunity. And we think that the premium of the rent that we're getting is going to persist for some time as we continue to scale up our business, extend our reach into the industry, and provide non-dilutive capital to cannabis operators to grow their business.
Very good. Has your management team been involved in many fundraising programs prior to NewLake Partners? And tell us about some of the other board members and their backgrounds, and are your financial statements audited?
Yes, so our financial statements are audited by a firm called ACM, which has just been acquired by BDO. So BDO is now our auditor. We do have, what was the first part of your question? I apologize, Alan.
About the background of the directors.
Oh, yes, the background of the directors. So as I said, when we first started assembling the team for NewLake, we thought, what are the three key skill sets that are necessary for success? Clearly, real estate was one of them. We've talked a lot about cannabis being another important element of skills. And then third is financial services, because as a REIT, REITs have a voracious appetite to raise capital and deploy it. In understanding the financials of the companies and the financing alternatives is critical to success, in our opinion. So on the real estate side, I said we have over a century of real estate experience. People who have been part of taking companies public. One of our directors sat on the board of Starwood for 2 decades. He also currently sits on the board of Marriott Vacations, as well as Phillips Edison. Another one of our advisory board members, as I pointed out, was on the ground floor of Innovative Industrial Properties and has been involved in commercial real estate for 30 years and has taken a number of REITs public previously. Another one of our key partners is Pangea Properties, over $170 million of capital. It's a private REIT, but been an extremely successful multifamily REIT for the last decade. On the cannabis side, as I pointed out, significant experience through the former CEO of Green Thumb Industries. He took the company public and so understands again what it is to get companies out into the public markets, but also brings that rich cannabis experience that has enabled us to educate ourselves as a team and really get up that learning curve extremely fast.
Excellent. How would going public and listing on a major exchange impact the value of the investment to someone coming in on this round? And what would be, the potential value of a listing, and would it be at a premium price to the current round? And potentially, how much of a premium could that be?
Sure. Jarret, if you could go back a couple of pages to the dividend yield page, that would be great. It's always hard to tell what a valuation would be upon an IPO. I can't imagine us doing it if it wasn't going to create incremental value for our shareholders. And when you think about how REITs are traded, again, in the lower right-hand corner, we look at dividend yield as a key metric for where REITs trade. Our investors today own NewLake at book value. For new investors coming in, they will be on the same basis, owning NewLake shares at book value. And we would expect that our nearly 10% dividend yield would trade down to this 2 to 4% range over time via a couple of catalysts. One of those catalysts clearly being the first step, accessing a public market. Two would be uplisting to a New York Stock Exchange or a NASDAQ. And then I believe there'll be a further catalyst to even go beyond what you see on the screen, which is the ultimate legalization at the federal level of cannabis in one form or another.
So it sounds like there could be a doubling just by trading in the range of other comparable companies, and then there'll be a couple of milestone events that should even give greater growth to that opportunity.
That is indeed what we see.
Wonderful. Let's see. Tell us about well, I think you covered that, the diversification. Tell us about your growth strategy, and are you considered one of the major players now in the cannabis industry with respect to the multi-state operators?
Yes. So, Jarret, why don't you go ahead?
Yeah, sure. So, at this point, given the niche of the market, there's only a handful of players in the country that are focused on cannabis the way that we are. So I would definitely consider us one of the major players in the space. As it relates for our strategy for growth on the operator side, on building up the portfolio, we focus on building relationships and building a business just as the management team has in their previous endeavors, whether it's CB or JP Morgan, where it's all about really client relationships, building that trust as we grow, as the operators grow, and as the industry grows. And I think when you look at our pipeline of over $350 million, and we see a deal a day, I don't think that there's a major operator in the country, in the states that we're focused on, that we aren't talking to. Additionally, we do have rights of first offer with a few of our existing tenants, where deals that they do in the future, we take a first look and have a right to pass or take the deal. So both internal growth and then partnering with new operators that we currently have dialogue with.
Excellent. Are there any legal implications to being a landlord in the cannabis industry in terms of federal law, banking issues, et cetera? And also, please explain what it means to be an essential industry within the cannabis industry.
Jarret, why don't you take the essential designation, and I'll take the legal question.
Sure. So, we feel like the essential designation will be looked back on a few years from now as kind of a milestone for the industry, where people looked at cannabis in the same light as a pharmacy. When in a world where banks were closed down and restaurants were closed down, cannabis operators were still allowed to sell product and to gain revenue. So we really do think that there's tailwinds for the industry, and it'll really push us forward. We also think, just by how the operators reacted, as Anthony pointed to, and changing quickly and kind of rising to the occasion, we think it could make additional states go from either having no cannabis to medical or medical to recreational sooner, especially with the budget shortfalls that they're seeing through COVID and the recessions. I think it could speed up the timeline in some instances.
And as it pertains to the legal risks, again, with the state and federal classification of cannabis as being different, there are theoretical legal risks at the federal level around providing real estate to companies that are in a federally illegal business. We've worked with our legal advisors at Denton's and Dickinson Wright, and consulted with many other legal experts to really get comfortable with what that risk was and understanding some of the federal prohibitions on the Justice Department from pursuing companies that comply with state legal cannabis laws. And so, yes, certainly, like most business plans, there's never one without any risk. Here, there is an element of it, but with our legal advisors, we've worked through it and become very comfortable with where we are.
And then talking about risks in general, what would you say are the principal risks to the investors, and then how do you mitigate these risk factors?
I believe the key risk is all about the making the right investment decision, and that has a couple of layers to it. Is it the right tenant and the right counterparty to enter into, and is the real estate right? And that means the type of building, the use of the building, the location of the building, the municipality it sits in, the county, the state, and so forth. And so we take this layered risk mitigation approach in looking at each one of our investments. But that really, it's not a simple one point answer. I would say it is most certainly those investment decisions we make, and it's the breadth of that team's experience to help us make good risk management decisions.
So it's the underwriting process that you guys bring to the table, and your expertise in that, particularly as it fits within this industry.
For sure. Well said.
And then finally, how does someone invest in this opportunity? It sounds like a wonderful opportunity, and you guys are kind of like a very, very blue chip opportunity within the sector, and offering wonderful yield, upside, potential for capital gains with a listing. How does someone follow up and invest, and what sort of disclosure, documents and offering documents can they get from you?
We do have a private placement memorandum. We've already raised some money in this particular round already. So we're active, and we have over 10 subscriptions already. They could reach out to you or Sarah. They could also go to newlake.com/WSR to learn a little bit more. And you could click on the contact information there. But I think probably the easiest thing, Alan, might be an email to you or to Sarah, and then have you connect them with us. That might be easiest for the viewers.
Okay, wonderful. I think at this point, we'll turn it over to Sarah and let her address some of the questions that have been coming in from the chat room. And again, I'd like to invite anyone who's listening, if they have a question, just go into the chat box and type in your questions, and we'll try to get to them as we move into this.
Sure, thanks, Alan. Great questions, and thank you, Anthony and Jarret, for your presentation. So as Alan mentioned, at this point, we will go ahead and open up Q&A for all participants. If you have any question and you haven't entered it into the chat box, go ahead and do that now. We still have a few moments. And I see a couple of questions that we'll go ahead and address, but I do want to remind those who joined a little bit later on the call that we will be sending follow-up emails to those of you who have serious inquiries regarding the offering, so you may be in touch with the team directly. So looking at some of the questions here, you did mention premiums on your properties, Anthony, I believe in one of the questions in answering Alan's question. We have a question that wants you to touch on the specific revenues per property.
Jarret, you want to?
Yeah, sure, I'll take that. So, from a NewLake revenue on the properties, it's a little all over the board because we have dispensaries where we paid $1 million, and then cultivation where we could have $15–20 million, and rent is based on our basis. But I assume the question is really how we look at traditional real estate metrics, and how much revenue the property is generating as it relates to the rent that the customer is paying. So on an individual basis, we look at rent as percentage of revenue, just like a traditional triple net asset. And for us, rent as percentage of revenue always has to be under 10%. In most instances, it's closer to that 5% range. Triple net retail, anything under 10% is considered good. We also look at the four-wall coverage, the EBITDA rent coverage, which is also used a lot in triple net retail. Averages for triple net retail is around 3x EBITDA to rent coverage. Across our portfolio, it's 6.6x EBITDA coverage, which obviously more than double. So while we are getting that rent premium, sometimes 4 to 6% higher cap rates than you would get for a traditional property in the area, the revenue that the tenants are generating very much justify that additional rent expense.
Okay, thank you for that. So you did touch on the dividend yield and potential valuation or uplisting on NASDAQ. We have a question from Mikal that says, what are the plans and timing for the IPO? Are you considering a traditional IPO with bankers or a merger with a public SPAC, or will you be self-filing or an RTO? So if you can just expand on that.
Yes is the answer. All of the above. I would say it's all on the table. I would expect we'll probably go the traditional IPO route with bankers, but we are having conversations around most of those other categories. And we are going to take the path that creates the best value for our shareholders. I don't want to get too ahead of our board or our process, but yes, we are looking at all of those. But if I were betting, we'd probably see us do more of a traditional IPO.
Okay, great. And another question here, have you invested in any bottling facilities? If not, can you speak to this opportunity?
Jarret?
Yeah, so in some of our facilities, and every state is very different in how they give out licensing, how they give out licenses. In the majority of the states that we've invested in thus far, the cultivation facilities are also processing and distribution facilities, so that bottling of products is happening at the cultivation site. Ohio is a market where processing actually does happen separately from cultivation, but we haven't to date invested in just a bottling facility or just a processing facility to date.
Okay, great. And then we have one question, I believe referring to property tenants paying in cash. How do you handle groups that must pay in cash?
Sure. So, there's a slight misconception which is not totally wrong, that cannabis operators have no access to banking whatsoever. What's typical, especially of a more established group, the ones that we operate with, the ones that we partner with, typically have access to state level banks or credit unions, and we actually don't accept cash as a rent payment from any of our tenants. We won't enter into a lease with anybody who can't pay us by check or wire, and that's built into the lease that's how they have to pay rent every month.
Their banking is while it's difficult, it's well enough available to the industry that if the tenant can't figure out how to secure the banking relationship, that's not a tenant for us.
And another question, can you hear me?
Yes.
Yep.
Okay, someone said they have a problem with hearing me there. What are your plans to retain BDO for IPO prep?
We are going through, I don't want to get ahead of our board. We're going through with our board all decisions related to that in the coming weeks and try to make some decisions around if, when, how, all of that.
Okay, great. I think this is pretty much it. That wraps most of the questions that we have. We have a few questions that are relating to sending out the PowerPoint. We will be sending that out to all of our participants following the event. And with that being said, I'll go ahead and pass it over to Alan so we may wrap.
Yeah, thank you, Sarah. Well, it looks like we're coming up on the 1 hour. We're at 11:59 here on the West Coast and 1:59 in the East. So I'd like to thank Anthony and Jarret for a really excellent and informative presentation on how to participate in the cannabis industry as an investor. It really seems that your company brings a very lower kind of risk profile to the table as to what investors normally see in the industry, and chance to be in a very profitable company, paying out very handsome dividends, and upside from profit sharing and going public. So it's really a wonderful opportunity. We've vetted it. We really like it a lot. And we hope that people, who are on this call or listen afterwards, follow up and send us your thoughts, email us, and let us know if you'd like to be in touch with the company as to participation. At this point, turn it back to Anthony and Jarret to conclude.
Yeah, I just in closing want to thank you all for your time. We have over 170 investors. We are, as I said, one of the most well-respected companies in our industry. We see phenomenal opportunity to further scale our business, enhance our yield, and take that next step closer to a public listing via this transaction, via the capital we're raising. So please don't hesitate to reach out to us at newlake.com or to reach out to Alan and Sarah and get connected with us.
Thanks, everybody.
Have a great day. Thank you.
Thank you.
Bye-bye.
Thanks for joining.